Welcome back. We're joined by Shivangi Sarda from Motilal Oswal Financial Services to talk to us about technicals and how she's viewing markets. Shivangi, good afternoon. Good having you here. Let me first start off with the Nifty. It's been choppy, to say the very least. We've seen one day of recovery, followed by, again, weakness and sustained weakness, followed by another day of recovery, followed by a third day of hitting all-time highs, followed by a fourth day of coming off. What's playing out?
Very good afternoon. Thank you for having me. So we've seen that the indices have been facing a lot of pressure of lately, and there has been quite a lot of rubber from the lifetime high levels in the last 2 weeks. We've seen, of course, there are a lot of global concerns that are, driving the index, and even today's bounce could not be held on to, and we've seen that it has again formed a very big bearish candle on the daily frame. Now, there is a lot of call writers that are still present on the higher side, which needs to unwind their position for the next stability to regain here. But of course, it's the weeks before the budget, so a lot of volatility will be expected here within a range. We are looking at actually 25,500 on the downside as a support, with the upside being capped at 26,000 levels. So these levels would be important to watch out for. Now, of course, Bank Nifty is the stronger out of the two, and we've seen that the PSU names, especially, have been holding quite a lot of strength, especially the heavyweight ones. And Bank Nifty has actually held on to the higher, band on the weekly basis as well. It hasn't broken any important support levels. It is trading above its 50 daily exponential moving average as well. So 59,000 would be the level to watch out and as a support, and for the upside towards 60,000 and 60,200.
Okay, so that's with regard to the Nifty and the Nifty Bank. Shivangi, your picks for this afternoon?
So definitely, we've seen that there is a lot of profit taking in the broader market, but there are some stocks which are resiliently holding on to the higher levels. First up on my radar is MCX. Of course, all the disclosures apply. This one has been one of those stocks which has been driven by the metal, movement of lately. But overall, as well, this has been an outperformer from the last 3 years with consistent buying at any small declines. It has been trading in an upward sloping channel consistently from the last 60 trading sessions, and respected its immediate support levels as well. So this one is looking quite positive. We've seen that of course MCX has been one of those stocks which has been resilient even despite the market volatility. So this one's quite strong, and we're recommending this for the next targets of 2350 levels and a support of 2230 zones.
Shivangi, the defense pack has come under increasing pressure today. I'm trying to get a sense as to whether this is a buy on dips candidate, and what within defense are you liking? What would be a good play at this point?
Harsh, defense is one space which has become tricky off lately. Of course, around the budget, we see a lot of momentum gaining here. But it has been consolidating from the last 3 months. And even though the support levels are not being broken, but the upside, follow up is also missing in some of the counters. So definitely, this one's on radar for a short term trading perspective. Or if someone wants to go really long term on that, but then it wouldn't be a stock that you could buy and hold for a few weeks. But then again, out of the lot, the strongest I can see is HAL, which is kind of consolidating within a narrow band from the last 6 trading sessions, struggling to hold above its key demo. But then again, we've seen that this stock would remain some bit consolidative. So this one could be kept on radar.
Okay, what do you make of the move on Eternal today?
So of course we've seen a lot of news flows in this stock of lately currently, and which is why the stock is gaining a lot of attraction as well. But it has kind of formed a bottoming out structure on the weekly frame, which is making the stock very comfortable. And even on the monthly basis, we are on a verge to negate the lower highs, lower top that we were making. So Eternal is looking quite positive, but now it has to kind of hold above 295 or basically close above 295 for strength to continue here. So we'll watch out for 295 for the next up move towards 305 levels at a support of 285 zone.
Okay, all right. So that's the take coming in with regard to where an Eternal is concerned, one of those big gainers of the day on the Nifty index. So, I mean, the take seems fairly clear. It seems clear that the current infrastructure bill does not change at all. So that initial feel that I spoke about clearly being brushed aside. They're saying that there won't be any change with regard to the business model either. It's just the marketing of the 10-minute delivery that goes away. So you will still likely get the delivery within maybe 10 to 20 minutes. It's just that the marketing of it being a 10-minute delivery may not happen. So that's something you want to keep your eye out on. But Shivangi, let me come to you. With regard to alkyl amines, the move in the stock price from the day's low is very, very steep. Talk to us about how this chart looks to you.
We've seen that this steep move was actually reflected on the 8th of January as well last Thursday, but then it could not sustain at the higher levels. So we're still trading at a very low price, and this stock has actually seen a lot of dampness from the last 6 months. So a lot of follow-up is required for this stock to again regain strength. My advice would be there are better stocks in the same sector which one could focus on.
Amrish Baliga also joining us, independent market analyst. Great having you, Amrish. Sorry, this has been a show which has been all over the place, given everything that's playing out, as you'd well understand. Talk to us about some of the gold financiers, Amrish. We have a Manappuram, we have a Muthoot. Gold has not taken a breather even now.
Right.
And therefore gold financiers in focus. But these stocks, especially Muthoot in that sense, not particularly cheap anymore, right? How should one look at them? Do you believe that this is a multi-year cycle in terms of gold and lending?
See, I mean, till date, we have seen an extremely good move as far as gold is concerned, and because of which clearly the gold financing business benefits because the loan component is much higher than what it was possibly a year back, and that's what is reflecting in the prices of all these gold financiers. But we should remember that at some point of time, I mean, history has shown us this that after this sort of a move, both gold and silver have corrected decently well in the past, and I don't see going ahead that could be different. But it's very difficult to call as to where the top would be. So, someone who is invested in Muthoot Finance or other gold financiers, I would say that possibly keep a trailing stop loss, because to take a fundamental call at this point will be difficult. It has got expensive, but looking at the momentum, better to keep a trailing stop loss. And the day the stop loss gets hit, just ruthlessly get out.
Okay, be ruthless about it is what Amrish is saying. Very quickly on charts, Kunal, Muthoot, Manappuram.
Yeah, I think they're still looking very attractive. In fact, there was a phase where Muthoot Finance did very well. That stock took a pause, and Manappuram Finance, I think, managed to pick up pace at the point when the stock was at 260 to 300, 320 kind of a range. I think last couple of days back, there was some negative news flow for Manappuram Finance. But the stock seems to have absorbed that quite well. It's now come back about the 300 levels. I would actually be bullish on both of these names. And my sense is that we are looking at this as a major multi-year uptrend for both of these stocks.
Major multi-year uptrend. What we'll do is slip into a very short break. Continue conversation with all three of our guests. Hopefully nothing breaks, but we will try to cover as much as possible on the rest of the show that we have. Stay with us here on ET. With regard to Eternal, of course, Amrish, I wonder what the take with regard to IT is, because you've got a couple of IT companies which have reported earnings. You had a TCS and HCL Tech. Surprised on the upside. HCL Tech more than TCS, of course. But is that largely going to be the story for Q3? You reckon even Infi will likely surprise on the upside?
Yeah, I mean, there could be some surprise on the upside, like what we have seen for HCL Tech as well as TCS. But then again, if you're talking of the next 2 quarters, I don't think, we can see too much of an upside as far as overall IT space is concerned. So I would say possibly utilize this upside to lighten your positions, and possibly you should get most of these stocks at slightly lower levels going ahead.
Okay, let's go across on charts. Infosys, how does this one look?
Harsh, we've seen that IT stocks had kind of gained a bit of momentum off lately, but Infosys has been making lower top, lower bottom from the last 3 weeks. And although it is taking a bit of a support near its 50 DEMA, but overall the momentum is quite less. And there are still call writers that are present at the higher levels, which is making the upside a bit capped over here. But overall, it looks like it's going to consolidate for some more time, and 1570 would be an important support to watch out for this one.
Okay, the call with regard to an LNT, is this a buy on dips, and therefore the kind of stock fall that we've seen, 3% lower today, is it an opportunity?
LNT has been one of the strongest stocks in this entire rally last year that we've seen, and it has actually performed quite well. Even though it has been facing some bit of profit taking from the last 4 trading sessions, it has actually broken its important support levels on the weekly basis, which is why it might take a little time to stabilize. But once it kind of crosses 3950 levels, then it would definitely be a good time to accumulate.
Okay, so that's one of the stocks which are buzzing in trade. Amrish, from a fundamental perspective, LNT at 3,900 apiece, is this a good time, a good chance to buy LNT?
Yeah, surely. I mean, we've seen a good move in LNT, and after that, we've seen this correction. I think basically because of two reasons. One is the talk of quit the project scrapping or rebidding, where I think LNT was L1. So I think that is what is hurting the sentiment today. And in the last 2 3 days, we've been hearing about government allowing Chinese companies to bid for projects here. So I think that's also playing out on LNT. But then I would say that if it corrects some more from here, I think it's a good level to start buying from a long-term perspective, because whatever said and done, you see the order book for L&T, clear visibility is there. And there's no way this company can underperform. We've seen that in the past also. So I think possibly on the next 4 or 5% correction, one should be looking to buy.
Now, let me talk about red tape for just a moment. Sources have told your channel that red tape has sought buyers as founders eye a stake sale worth $509 million, which is roughly 4,000 crore rupees. In terms of the stake of the current promoters, it's at around 71%. It's a 6,500, 6,600 crore odd market capitalization, and therefore the 71% should be a 3/4 stake, which is roughly in line with that $500 million valuation. In terms of the Red Tape's founding family, they've appointed Ernst & Young as financial advisor for the stake divestment, and Red Tape's founders have reached out to Blackstone, KKR, to invite interest of this stake. Now, not sure how this is likely to play out, but you can see the sharp spike on the stock price of a Red Tape as a result. This footwear industry, Amrish, does it interest you at all?
Not really at this point of time. I mean, although we are talking of consumption, but then we have seen most of these footwear industry languishing. I think the top one is Bata, which has been languishing for too long a time. Red Tape, clearly because of all this news, possibly it can move, but overall I would avoid.
Okay, on charts at all, Kunal? Just trying my luck.
Nothing as such. I mean, Bata is an underperformer. I think Red Tape, I don't track it, so I'll skip that. But nothing major on the charts, which probably warrants any kind of a major interest over here, unless there is any kind of a sustained turnaround which we see. But I think even that happens, the stock prices have to probably rally by at least another 15 to 20% for these stocks to come back into any kind of a breakout, even if it's on a short-term time scale.
BSC, Kunal, how interesting does that chart look to you?
Yeah, this is very interesting because the stock, I think, if I'm not wrong, even yesterday the stock was up a couple of percentage points, 2 or 3 percentage points yesterday, and that were at a point when the markets were supremely volatile. Yesterday, and the stock was trading into its own zone on the higher side. Today also the stock has managed to carry forward the momentum on the higher side. It's broken past about the 2,800 levels back again. very close towards its recent swing highs. So the chart patterns look very attractive for BSE, and this generally indicates that we are now looking at a point where the stock would come back into momentum of its own. 3,000, 3,200 could be a potential target range for the near term for BSE.
Okay, so that's the take with regard to a BSE. I'm just going to try and quickly pull out some sectors which are doing okay. The Nifty PSU Bank is seeing a further spike, but the Nifty IT index is what's really standing out to me. Now, from that absolute flat line, the Nifty IT index has seen a bit of a surge, if I can call it that. 0.6% higher on the Nifty IT index. Shivangi, anything within IT that you're liking?
So definitely IT has kind of gained a lot of attention of lately. But there are stocks which have been quite lackluster for a long period of time, and they are kind of gaining attraction at these levels. And there is a bottoming out structure in most of them, but then again, follow up is required massively in this entire space for it to cross and hold the important key levels. So IT would be a little wait and watch as of now for me.
A bit of a wait and watch. Okay. Amrish, Realty, the numbers look weaker than what one would anticipate. And the kind of surge that we expected in FY26, well, we're still waiting for that. Q1, Q2 was soft overall as well. I know a couple of names would have done well, but outside of that, I'm talking about the larger universe. Are we seeing a slowdown? Is the cycle turning a corner? How should one look at that?
See, basically, what pushed the realty pack up was the sort of sales which you saw for premium housing in calendar year 2025. But then towards the end of 2025, we started seeing a bit of a slowdown in that space, build up of inventory. I think that's going to continue for a while longer. But then the way I see it is 2026, maybe in the second half, we should see the affordable housing space again picking up, which has been lying low for too long. I think the last 1.5, 2 years has been slow for affordable housing. But that space, I think, should pick up over the next 2 quarters. So companies with possibly affordable housing, a larger portfolio of affordable housing, I think those are the stocks to be looked at.
Okay. All right. What we'll do is we'll wind down for the day. Shivangi, Amrish, thank you so much for joining us. It was a packed show and it was a pleasure having you here. And we'll go